Let's bring it back to perhaps the top story that is shaking the markets about 10 minutes away from the European Open, and that is this tariff story, this countdown to Donald Trump's Liberation Day next week. For you, what is the canary in the coal mine here? What is the trade that people are putting on or taking off?
Yeah, morning, Kriti. Our reporters have obviously been speaking to macro fund managers all around the world to try to get a consensus view on that. And I think that two things emerge from that are pretty clear. One, that everybody has been scaling back risk in recent sessions. And of course, you can see that in declines in the equity market, widening credit spreads, the rally in gold, those kinds of things. But also, it seems that quite a few of them are still of the mind that this is going to be an opportunity to buy a dip. That people are looking to come out of it with, a surprise kind of a rally or an opportunity, or maybe it won't be as bad as you thought. So I guess if you're looking at where the balance of risks is, that could mean that if Trump is as aggressive as, he's been promising in a lot of the rhetoric, bar the last few days, that could still trigger quite a negative market reaction because perhaps people aren't quite prepared for that at this moment in time.
Paul, what's the bigger event next week? Is it the tariff story or is it payrolls?
I think the tariff story on a global scale is a thing that everybody is ready for and paying attention to. Yes, OK, the US economy is kind of important and what the Fed does is going to matter. But even then, I think that the market is focused really on what that long-term tariff risk is, even for things like inflation and the labour market that the Fed will need to pay attention to. If you look at, say, the US yield curve, we've got this steepening of the 5s, 30s, which shows that people are pricing in higher inflation for longer. That's spread at the widest in several years now. You've got break-evens widening back out. And again, like I said, the gold trade, which could also be seen as an inflation protection measure. So I think that people are worried about the stickiness of inflation and people are worried about, if the labour market starts to deteriorate as well, what that looks like in terms of the sort of magnification effect. But what people are really focused on is what's the damage from the tariffs going to be to the US economy, and can Trump put it off, and will it be okay?
Well, Paul, we've seen a lot of habit, I have to say. I'm very sorry. But, Paul, we have to talk a little bit about perhaps what is priced into this market. So much of an expectation of those set tariff story. Is that going to show up, for example, in the PCE data later today?
So I think that people are looking for a little change in the PCE, which is, you could read it as, OK, so it's been moderating very slowly, or it's still sticky and holding up. And I think that what the Fed speakers that we've been hearing from recently are fixated on is the idea that it's not coming down as fast as they would really like, and therefore they're going to be keeping interest rates on hold for longer. We heard that overnight from the likes of Collins, Barkin, I beg your pardon. And so that, all things being equal, would see them not reverting to cuts anytime particularly soon. And that would be, kind of not offering any support for the economy as those tariff effects start to really hit home.